Welcome back to Let It Grow Investing. Thank you very much, as always, for dropping by to have a little chat here with me about what's going on with the stock market and really what we do going forward from here. That is typically what we're looking at, but thank you for stopping by. Please make sure you like, subscribe, and share. It takes 2 seconds. The button's right down there below the screen, and I would definitely appreciate the support. Right, I'm not asking for much. Just simply click that button and help the podcast grow. If you share or do anything else, extra high five for you. But yeah, man, we've had a lot going on this week, a lot of big movements, a lot of names that are rallying, some growth names getting beat up. Some of them are on really little news. So that is definitely something I want to consider. And then actually where these stocks go from here. So yeah, I guess I got a couple things written down here on my little notes sheet, and we'll try to cover exactly what I'm seeing and really, where we can see the market going from here. A lot of people concerned about, what does this say? Riverside wants to share picture in picture. We can do that now. Yeah, let's allow that. That'd be cool. Now I can actually see myself. Wonderful. All right. So yeah, we've got, I guess we can go with NVIDIA, right? NVIDIA is definitely top of mind. We're seeing a lot of news with NVIDIA. And man, things have been a little slow for them, but now, Wall Street seems to think that NVIDIA is in the clear after DeepSeek, after all the other AI, the slowdown, and what could potentially be if China could build, a Chat GPT competitor, a Gemini competitor for $6 million, which everyone kind of called BS on from day one. But the market still reacted to it, right? We lost so much money in market cap. What was it? I forget, $500 billion in market cap amongst the Mag 7 or something like that. Don't quote me. I'm probably wrong. But I know that it went down significantly. So now that we are looking, and I'm sharing this screen and I can actually see myself, that is super helpful. NVIDIA, let's take a look here. So, yeah, nice rally here going forward. We had, recently, now the screen is actually in my way. That is not ideal. But if we're looking at the 1 month, we will see that we got down here to like 116, right? So we got down to 116. We're sitting at 138. We got away from some of that DeepSeek news. They also divested out of Soundhound. They trimmed their ARM position and two other ones that I don't really follow, so I don't remember those off the top of my head. NVIDIA is actually getting into Nebius, which I'm not familiar with at all, and Weride, which I believe is like Uber of China. I'm not 100% sure on either of those. But yeah, so NVIDIA, they get out of Soundhound, and what happens to Soundhound? Let's take a look at SOUN. Well, they get pummeled, right? They're down 28% on Friday alone. So we got to take a look here. Well, were we getting in Soundhound because NVIDIA brought it to our attention that this could be a major player going forward? Probably a lot of us were, right? So there are a lot of people getting into this thing around 5. I think that's when we originally entered into it. It ran up to 15. Now, if you're NVIDIA and say you had $100 million put into this thing, and it goes up to $300 million, maybe you just want to cash out, right? Has anything really fundamentally changed with Soundhound? I don't think that it has, right? So there's still going to be a great growth stock. I think for NVIDIA, they already cashed out. They're making, however many millions of dollars simply by holding the position for a few months. And now they rotate. So we look at what did WRD do? That was Weride. Oh, they're just up 83% on Friday. So they sell out of Soundhound. They get into Weride. They almost double up immediately on that. Can you really blame them, right? It's kind of market manipulation. They just say, hey, look, this is what we're doing. It's not really manipulating it. They're just making that play, and everyone else is following because NVIDIA sneezes and everyone gets the cold. So I am seeing, a lot of people chasing Weride. What about Nebius? Let's take a look over there. Nebius is NBIS. They're only up 6.7%. But yeah, Weride was definitely the big one that moved on that news. So I don't know that I'm chasing Nebius or a Weride, but what I would think about doing is getting more involved into Soundhound. Right, the market is overselling it. NVIDIA is getting out of it. They dump all the shares. There's a glut of shares on the market, And now no one wants to buy them because, they're tainted. NVIDIA doesn't want them. Why do I want them? But I do believe that this could be a great time to actually enter. If you were looking to enter this thing at $15, you got to look at this thing at $10.97. Think, well, hey, I just got a 30% cheaper offer simply because NVIDIA already made their money and they're moving on. So we got average price target on the street of 24. I don't know that we're going to get there. Hey, maybe we double from here and get to 20. Maybe we get back up to 15, right? I think 15 is very plausible. And then you're up 33% simply by getting right back to where we were, and you got it at a discount. So I guess the theory here is, or kind of the explanation here is, Wall Street sometimes just tosses stocks because of one irrational move from one company, right? And they might have made their money on it. That doesn't mean that we all have to run for the hills simply because NVIDIA did this or did that. We've seen that with DeepSeek, right? Everyone kind of traded down on that news. And then we looked into the news and we're like, oh, it's not really that bad. They didn't really build this for $6 million. It was probably more like $100 million or $1 billion after they actually put in all the IP, all the chips that they probably got illegally. Everything else that was kind of behind the scenes there, and the amount of research and man hours that were put into building out DeepSeek, right? So I guess we've seen this in bigger stocks before as well. It wasn't long ago we were looking at Meta, when Meta was $300 or $200. And let's take a look here. Meta, is now 736. And sorry, let me get I can use this one. That'll work. Even last April, we were down at 450. But, you go back to 2023 and it was even cheaper, and nobody wanted it because of the metaverse, right? We were spending too much money on the metaverse. So everyone dumped their Meta shares, and now they're like, oh, you know what? You can't compete with Meta. They've got a lock on everything advertising. They're the best place to do it. And there's no other, player in the game that can do what Meta does. So, we get out of it, but then everyone else rushes back in because it's too cheap, because the advertising is too strong. The revenue, the margins are just insane. Now this is in the way. So if I get back here, this was November of 22. We were at $90, right? And I believe if I went back and was looking at this one, I'm sure we were buying in November of 22, and we're grateful that we did. I know I bought it after that or before that, and kind of average into the position. But that is definitely a point of looking at what stocks you can really average into when they are being sold for dirt cheap, and it really doesn't make sense on the market. So that is definitely something I want to take a look at today. What other stocks can we be taking a look at that are great companies that get traded off for, this or for that? And I think one that comes to mind right now would be Alphabet. And I know Alphabet is not one of the 12 stocks that we are looking at to invest in over the course of this year into our Let It Grow investing portfolio that is on Webull. There is a link in the description to get you started. But when I am looking at Alphabet, there is a lot of things here that actually, you know what, did I have? I did have one thing open here for Alphabet. Let me share this tab instead. Look at me actually sharing what I'm looking at. One quantum computing stock that could be the biggest AI buy of 25. We're looking at Google, right? We've got they've got a ton going for them. Great way to capitalize on AI and quantum. And there's just too many pop-ups on the screen now. I might have to close something out here. We've got, yes, they did this, one of the fastest supercomputers. They did a computing task that would have taken the fastest supercomputers 10 septillion years. That is 10 with 25 trailing zeros to complete. That's a ridiculous number. But then, even more critical is the technology that was used to complete it. They basically went on to say that this task that they did, they never really needed to do, but they wanted to prove that the supercomputer could do it and do it faster than anything else. So yeah, it's not like classical computing. It uses a lot of different things that I'm not even going to try to explain. But the fact of the matter is that quantum computing is going to be a game changer, and Alphabet, Google, is at the forefront of that. And, a lot of people are talking about the fact that search is going to be a problem for them with AI. But I think as long as we stay on brand and people still use Google, I don't think it's going anywhere. It has been a fact of the matter, for 3 years now that search is going to be destroyed. AI is going to destroy search. Well, people still use search. It is still a huge driver of growth for them. We've got some of these numbers here, and let me see. This is actually the one that I wanted. Let's get to this one. This is for Google, right? We're looking at, or Alphabet. We're looking at revenue, right? 96.47 versus 96.56, right? So a little light on what came in versus expectations. Earnings outpaced expectations. YouTube advertising outpaced. Google Cloud was a kind of the black eye on the company right now, right? And acquisition costs, a little bit high. A lot of people were pointing to the fact that cloud revenue was down. We saw that from AMD. We've heard that from NVIDIA. We've seen it from other players. So we know that's a thing across a lot of companies right now. It's not simply just a Google problem. That is a kind of industry-wide problem. But they're going to continue to outperform on AI. They're going to continue to work on quantum computing. YouTube is still huge. I don't really know that they are a replaceable entity at this point. I don't think that Google search is going away. And then I'm going to get back to actually what I was looking at here. How can I move this? All right, let's do that. So what I was looking at here was the Refinitiv report. And let's then share this tab. We are going to be looking at the fact that it is still a strong buy, solid returns. We're seeing, if I go down a little further, we're seeing about 15.5% of upside, which is very comfortable for me. I'm not afraid of buying it at that. I don't need Google to be a 300% returner. I'm buying it for the long term, right? It's a long-term investment, not going to be a short-term trade. I've held this one for quite some time. We're looking at 11% increases in revenue in 25, 23% by the end of 26. We're looking at these numbers over here. Then we kind of scroll on down. I'm looking at, I'm not concerned about the dividend there. Margins about 28.6%, gross margin of 58.2. A lot of companies would cut off their arm to get those kind of margins. And Google does it all the time. And they just kind of keep executing on revenue and sales growth. Yes, they had a couple things that didn't quite go as well as they thought, but they were still a big increase year over year. So we're looking at forward PE. You are getting Google at a forward PE of 20.9. Now, that is a sale for a tech company, especially one of this size. That is, this one normally trades 23.9, which is very reasonable as far as I'm concerned. I'm sure Pepsi is probably up there around the same as far as the actual forward PE. I could pull that up. I don't look at Pepsi all that much, but not the point. Price to sales is at a 3.1. Yeah, I mean, that's a little bit higher than their 5-year average, but hey, guess what? If you're buying Palantir, that's at a 55 price to sales right now. And Palantir just doesn't make as much sense to me. And I've been saying that since 70. I don't think that it is just going to continue to rally. We're up, 600% or something. It doesn't make sense. It can't really continue to keep growing unless we have just these outrageous revenue, beats. And I think at some point that's going to slow down. And even if it doesn't, I don't know that we're going to continually be priced at a 55 price to sales, right? But if you're looking at Google, right, this forward PE is at a 20.9, forward PEG ratio, which I tend to really look at heavily on stocks like this, is a 1, right? 5-year average is a 1.8. Anything less than a 2.2 is considered really good value because the S&P 500 average is a 2.2. So you take your price to sales, you divide it by your growth rate. So not your price earnings multiple divided by your growth rate. So when we're looking at that, we're looking at the prices to earnings being low enough to where the growth is basically keeping up with the price earnings number. So it's a 1-to-1 relationship right now. So that means it's a good value, good point to enter. We see this on NVIDIA, right? A lot of people look at NVIDIA not, from that lens. They look at the fact that, NVIDIA, it's so expensive. It's gone up this amount, that amount. And, really, truthfully, with the growth that they are able to forecast, at least through the next 20 months, it still looks cheap. And let me see if I can share this one again. Let's get back to NVIDIA and see just what they're doing. I will share NVIDIA. All right, let's share that one. Let's get back over here. So now we're at NVIDIA, and let's see. Where am I going? There we go, Refinitiv. Sorry, guys. Now I've got something else on my screen to contend with. So we're still in a buy, 5-year return, and, just 1,900%. Nothing to worry about there. Just joking. That's fantastic. I would love to have said that I got in 5 years ago, but I did not. So 27% of upside on NVIDIA, and I was saying to buy this one in the 1-teens. I think it really made sense there. And I thought a lot of people were overreacting to a lot of the DeepSeek news and some of the disruptors that are out there. Annual revenue, just 112% up for 2025 and 223% up for 2026. Or by the end of 2026. Nothing small there, guys. That is huge. Dividend growth rate, 75%. I didn't realize that they upped it that much. Granted, it doesn't pay much, but we're still looking at a company that is willing to pay us more to hold on to their stock. So I'll always take a dividend increase on a company that is especially returning any kind of revenue or growth numbers like this. Forward PE is a 42. You're going to pay more for the amount of growth that you're getting out of this one. Forward is 34. 5-year average is 42. We've got price to sales at a 27. Still high, but much less than what NVIDIA is, or Palantir is. Guys, I'll get it together, I swear. Forward, 34. PEG ratio is a 0.5, right? So again, Google looks cheap, or Alphabet looks cheap, but NVIDIA looks even cheaper when you're looking at this metric, right? The 5-year average is a 1.7. Forward PEG is a 0.5. It is a quarter of what this other semiconductor industry average is, and you're getting NVIDIA out of it. It does not make sense, but the growth that they are able to turn in is just out of this world when you're looking at a company this size. It's unheard of. Gross margins of 75.9%. Net margin of 55. I mean, it is crazy. So, I don't think that the price on NVIDIA, even in 130s, I don't think it's too scary. I truthfully don't. I think that it could be bought today. You could average into it weekly for the next year, probably, and probably be comfortable unless this thing goes, double to 240, 260, whatever. And then you really got to think about, is it worth being what's the market cap right now? Market cap 3.2 trillion. Is it really a $6.4 trillion company? I don't know. And when does that growth slow down? It's a really tough call. But I think for me, this is still one that is, certainly purchasable at this point. Certainly one that I am a fan of. And it's done really well for me. So, that is that. We've got Paul Tudor Jones, right? I was looking at billionaire Paul Tudor Jones, and now I'm on this page. Let's see here. He is pouring $445 million into a single asset, right? This is all going into Bitcoin. This is going to their BlackRock's Bitcoin ETF, and that is IBIT, right? So he now allocated about $445 million to this Bitcoin trust. And I think that's about a double from what he originally had into this position. So the BlackRock iShares Bitcoin Trust currently manages around 580,000 Bitcoin on behalf of its clients, valued at $58.86 billion at time of publishing. So I don't think that Paul Tudor Jones is simply buying Bitcoin for the sake of saying that he's buying Bitcoin. I think that he sees that this is at a safe level to purchase. We are very much comfortable with Bitcoin at 100, 105. Yeah, we're probably at like 96, 97,000 now. But it looks like the big players are still willing to buy at this price, which only means that they think it's going to go higher. If they control all of the market, if they own such a vast majority of Bitcoin that is in existence in their portfolios and everyone else has to buy it, I think they're going to create, again, a little bit. I don't really want to call it market manipulation, but it is to some point creating a scarcity of supply that is actually available on the market. So, do we go ahead and buy at 96, 97,000? I think we probably can. Do I want to go all in at 97,000? No. But does it show me that there is a base point to where this is being bought up at this point by some of these big, hedge fund managers and ETFs? Yes, it does look that way. So again, I'm not going all in. I will continue to put a little bit of money into Bitcoin, probably a little bit into Ethereum, maybe some XRP, maybe some Cardano. I'm not huge into a lot of the altcoins anymore. I think that Bitcoin is probably the main player. I will, try to, allocate enough capital there. I think currently I'm probably around 7 to 8% of my portfolio being in crypto. And I'm comfortable with that number, right? If it goes to zero tomorrow, which, I mean, if people are spending $445 million on it, I don't see it going to zero. I know a lot of people will contest that it's, validity of it or how useful it is or anything else. But, I think a lot of people could say that about artwork or, Pokemon cards, or pick another thing that probably shouldn't be worth what it is. And, there's always a buyer. So if there's a buyer, that means there's a market. If there's, a buyer and seller, there's definitely a market. So yeah, that is definitely something where I think I could probably bump up my crypto holdings a little bit over time and feel a little bit comfortable with that. So yeah, we've got that. We've got a lot of people pointing to the fact that drones could be a next big trend. And I wanted to look at a couple names and then get to the one that I might be buying this week. Archer Aviation, they're up about 8.7% on Friday. Still a lot of talk about, the future being robotic or delivery or warfare. There's a lot of talk about drones being that future. So Archer has been catching on. We've seen that one. Kratos has been, they didn't do so hot on Friday, but a lot of people pointing to the fact that for defense and things like that, Kratos could have a bump up from a lot of this drone spend, even though this PE worries me. I'd have to take a deeper dive into that, and this chart looks ugly. That's only over 1 month, but I'm, again, having this other little pop-up window in my way. What's the 1 year? Okay. All right. Well, this is a nice little, trend higher. We got a little too ahead of ourselves and we pulled back. Truthfully, this is actually, looking at this chart, looks a lot more comforting than just looking at the 1 month. The 1 month looks like, why would I buy this? This is in free fall mode, but we're probably going to find some support lines here going forward. If I were to draw a line along this plane, we're going to have some sort of support, and probably around this number, I would shoot to say $25 to $27. And what kind of analyst research do we have on this? Not that I trust a word that any of them say, because sometimes I don't think they know what they're doing, but 32% upside there. So take that with a grain of salt. I'd still really take a look into that price earnings and see if there's a one-off or something that pulled those numbers so out of skew as to where it should be trading to bring their earnings down, that maybe they had to spend something or pay something out to bring their earnings down. That could certainly be an issue. That is a one-time issue and not a long-term issue. The other one of the 12, right? And let me actually go ahead and pull up that watch list and see just what stocks we're looking at and how these are really looking. Palantir, I probably added this when it was 50% lower. I don't know, was it in the 70s maybe? And man, I think I probably went on camera and I said, I don't think I would add it here, right? Maybe I was buying a little bit, but I'm not buying it hand over fist. Well, now at 119, I'm certainly not. So what did I do? I wrote a covered call on Palantir. I forget. Let me go in my orders and see just what I did. Let's see what was executed this week. Palantir, I did a 135 for March 14th. So if it gets to 135 on March 14th, I'm selling 100 shares, but I made $2.80 times 100 to do that. So I made $280. simply by offering someone the option to buy my shares at 135 on March 14th, less than a month away. If they go up another $15, that's going to be executed. So I would be selling 100 shares at 135, but I already got my premium of $280 in order to write that. I also did an NVIDIA covered call at 158. And I just said that I would be buying more, and I probably will. But I think if it gets to 158 by March 21st, it probably got a little too far ahead of itself. So $350 there for the option to sell my shares at 158, and they're currently 138. So I did those two plays. Bought some more AMD, bought some more UPS, apparently twice. Sold some Celsius because I don't really know where that thing's going, and I don't really want to be bag holding on Celsius. Right. So where were we? Yes, watch list. Sorry, got distracted here. We were at Palantir. Yeah, CrowdStrike still looking strong. Meta, even at 736, I am still comfortable with that one. This PE is not stretched all that much. It's a 30 times. The earnings is, pretty outstanding. I would still be buying this one. I'm not all that concerned about it. I'm guessing we got some upside here. I think that this continues to grow. I might buy it a little bit lower than this. Wait to see what happens here. It's not one that I'm screaming, I got to get this one today. It's going, to the moon. I think that would probably be more of a Google or maybe even an Amazon talk, right? I would probably be looking at those more for the fact that data and cloud slowed down a little bit for those two. But yeah, I still really do like Meta. I think it's been a great company, especially if you got into this thing at 90 in the end of 2022. So we got that one. The one I really do want to look at right now, I did buy AMD this past Monday. I added again, like I just showed you guys, into my own portfolio. But I think I would probably be tempted to buy more Tesla here. There's a lot of different things going on with Tesla. You got a lot of noise from Elon, a lot of people trying to sell off just because Elon is doing Elon things. But the fact that they're getting full self-driving in and around, or robotic taxis in and around, what was it, Austin or Houston? I think it's Austin. I think that should be rolling out around June. He's still looking to build a lot of the Optimus robots, which I think is going to be another huge driver higher. There's a lot of different things going on, right? So I don't necessarily think that the end all be all is the fact that the vehicles are coming out, the new Model 3, the new Model Y. We've got a lot of other things going on that could really push Tesla to a much higher level going forward. So I think that I probably told you guys I wouldn't buy this one, much under 400. What's the 1 year? So I think, I don't even remember my covered call on this thing. I forget. I try to repress it. It's probably like 270 or something like that. I got out of it and it continued to run up to, there it is, 488. I think I bought some more in the low fours. I think I added a couple shares, and I think kind of subconsciously I was talking to myself about the fact that I could have purchased a whole bunch more at 400, write the covered call, and essentially lower my cost on it about $30 from there, which would have been like 370. But now we're under that to write another covered call to generate some more cash. But now it's getting to the point where I'm thinking it's getting to the point where it's oversold, right? I haven't really checked that on an RSI. I guess we can pull it up. Let's do that. Let's go ahead and go advanced chart. How do I do it on here? I'm used to doing this on the phone. Support resistance. That's not what I want. I want, sorry guys. Let's see here. Lower indicators. I have too many screens going. We've got, weighted moving. Where do we got? All right. I'm having a hard time finding what I'm trying to find. Oh, RSI. There we go. Let us see just what this shows us. Let's go from there. Let's see if we got any kind of oversold. Yeah, we're probably a bit light. We're at a 40-ish. I'd like it to maybe get a little bit lower. If we got down closer to a 30, it's definitely going to be oversold. But yeah, I mean, I'm still in the camp of I think it could be a safer time to buy Tesla. A lot of people trading out of it. A lot of people worried about Elon. The fact of robotics and a lot of the things that they're working on kind of coming to fruition, that starts to make me a little bit more bullish on the fact that this could be a decent entry point. Maybe not a Meta in the 90s, in the $90 price point. Meta wasn't a thing in the 90s itself. But I think it's getting to a point where I feel a lot more comfortable buying it, adding it, and holding on to this thing for a while. So Tesla is going to be the one that I'm adding this week. Other stocks that I was looking at, Google, Meta, Amazon, L3 Harris, which is LHX, Micron, and AMD. Man, Micron took that bit of a dip, but I think we've got our footing below us now, and I think we're a lot more comfortable where this thing could be headed. So we've got price earnings of a 27. That seems pretty high for them, actually. I'd have to take a look at that. Analyst research, still around 37% of upside here. Yes, there was a bit of a slowdown in memory, but I think a lot of that has bottomed, and I think we're kind of trying to get out of that glut that we were in, and the pricing power wasn't quite there. Now I think we should be at a point where Micron really starts to turn things back on, and I definitely think we can get to 130. So yeah, Micron I'm still looking at. AMD, where are we on AMD? Still about 30% of upside there. A lot of price targets came down. I am still buying this one. I showed you guys my portfolio. I'm open book on that. I'm buying AMD. That's what I'm doing. DraftKings. I did want to take a look at this thing real quick. We had a monstrous day on Friday for DraftKings, up about 15%. Nothing like Weride that we were talking about earlier, but the fact that they were able to up their guidance for the year was huge, right? Though we're definitely seeing, I got a couple covered calls on this that are in the negatives right now because they were set at $50, and I might lose them, but that's okay. I've made my money on those positions, so that's fine. We're outperforming the market. We've got, where was it? Flying like an eagle. The Super Bowl looks like a big score, right? So finally, we're getting some movement out of some big events, and that is definitely helpful. I'm also seeing people saying that, what are we maintained at buy, right? So we still got buy ratings on it. What was this one at? Just wondering if the new ones, and again, this is why analysts, sometimes I don't buy it. They didn't see this coming, a month ago, but now that we had new earnings, now it's the greatest thing to have. So I always don't necessarily always agree with them, but yeah, now, hey, it's $60. We, could have done some figuring as to what those numbers actually look like and where this thing could potentially be trending if EPS hits, if earnings hits, and, kind of backdate it, how we get it based on what PE metric we're willing to assign to it. And yeah, I mean, again, is it really science? I don't know. I feel like it's a little bit of seat of the pants as to what it's going to be and how they're going to do, and can we get to positive earnings and everything else. So that one is definitely there. Uber, I did want to take a look at Uber, down a bit. Lyft, I'm hearing more and more people talking about the fact that Lyft's metrics are outpacing Uber in a lot of different manners, and people looking to buy Lyft instead of Uber for the fact that they could have more growth. So Lyft has about 30% of upside. Uber, and again, don't take this as gospel. This is just what, the analysts are saying, $91. Not anything that I'm really pushing to get into. I see the validity of it, but not something that I'm just screaming to go out and do. Again, I think those stocks right now for me would be Google. It would be AMD, Micron, NVDA. Probably some Amazon. Did I take a look at that one yet? I'm still comfortable buying Amazon. I'm not going to be upset getting 17% of a return if it does get there on Amazon. And a lot of other people pointing to the fact that growth stocks could be a severe pain point going forward if rates don't come down, if they actually go the opposite way and start trending higher. That could certainly be a problem for the market. It's certainly going to reevaluate what's going where and where the dollars are actually going to be going. So Mag 7, man, I still think there's a lot of value in some of these names as a lot of the other ones, the PEs and the metrics just keep getting pushed higher. I still think that there is some value in some of these names, and we really just have to take a look at which ones work for us with our given timeline, right? And if you got an Amazon or a Google, maybe it doesn't make you a millionaire tomorrow. Maybe it doesn't ever make you a millionaire if you put in $100. But I do think that it is going to continually grow with your portfolio, right? So if you're looking for a long shot, I'm not looking for that one, right? They're already massive companies, and I'm not really out here to just push small stocks. But I do think that there are a lot of smaller companies that make sense at the right price point, and some of the right price points aren't there right now. So again, I'm looking at some of these big players. I'm looking at some of the trends in robotics or AI, quantum, and seeing if that could be a nice move higher. Warren Buffett actually sold out of DaVita Health, and I don't know that ticker, but he's getting it's DVA. Type it and it shows up. So he's getting out of this one. Good reason why it's down 11% is because Warren Buffett trimmed. So yeah, we're still a lot of rockiness out there. If Warren says something, if NVIDIA says something, it's going to sell off, right? And that's just how it's going to go. So if you're buying Soundhound simply because NVIDIA said to do so, and you didn't really have any long-term thought process as to what to do when it gets sold off from NVIDIA, I think we really got to go into homework mode. We need to sharpen the pencils, do a little bit more research before we just start clicking buy, figure out what it is that we want to do with this position, write it down, right? If it's a 2 times, you should have sold this thing already if you're in Soundhound. If you're waiting to see what AI does and what the revolution does for these companies that are using Soundhound products, I still think we have a long runway to go. So I wouldn't simply run for the hills because NVIDIA said I'm getting out of it. I would probably take a look. Is Soundhound a better bet now than where it was, 3 months ago or even a week ago? And really make some kind of decision based on your own research rather than simply NVIDIA is buying it, so I am. I'm going to go back quite a ways, and one episode was titled, Give Me 3 Reasons. Give me 3 reasons why you want to buy a stock. If it's because your buddy said so or a broker said so, they have their own agenda as to why they're buying it. And, it could simply be because NVIDIA is buying it to run it up 2, 3, 4x and get out. So yeah, you got to really do some homework. Are their earnings solid? Is the moat around their business, is it really strong? Can anyone recreate what they are able to do? Whatever else that you really find to be beneficial to that company that no one else can do, or something that they are doing really well that everyone else is really struggling at. So give yourself 3 reasons as to why you're buying a given stock before you simply just click buy, right? I try to keep you guys safe and somewhat protected in making, harmful decisions to yourself and your money going forward. So that's about all the time that I got. I think I covered everything on my list. I'll probably be buying some more of all of these, but Tesla is certainly on that list for tomorrow. Well, sorry, not tomorrow. On Tuesday, we will be closed. The market will be closed for President's Day. And I'll probably move some more money around and be buying some of these stocks that I just talked about with you guys. I'll definitely be buying some Bitcoin. I had a USDC term where I was getting whatever percent to stake my USDC on crypto.com. Link is in the description. That expired. So now I have my USDC to roll back into Bitcoin, and I'll probably be doing that here this afternoon. So thank you guys for stopping by. Please make sure you like, subscribe, and share. Happy President's Day, and I will catch you guys in the next one. Take care.